We are talking today with Steve Brunner, Vice President of Employee Benefits with Tompkins Insurance. Steve, thanks for taking time today.
Thanks for coming and seeing me.
Employee benefits, a lot of attention right now on that, and particularly the October 1 deadline that's approaching for the open enrollment period for Affordable Care Act exchanges.
Mm-hmm.
Making your life a little busy right now?
It's doubling our efforts, yes, but a challenge, and it's a neat opportunity yet to explore different options for our clientele and the business community in Berks County.
So what are you hearing from the companies that you're dealing with about this?
Well, the biggest thing I'm hearing about healthcare reform, quite simply, is there's a lot of misinformation out there, or misinterpretation, I guess I should say, of information. On a daily basis, I get 3 to 4 emails from various sources clarifying certain aspects of healthcare reform, something as simple as the notices of the marketplaces that had to go out October 1st that has now, it's now recommended that they go out and follow through. There's going to be no penalty attached to those if you don't send them out on October 1st. But just simple things like that, different programs within healthcare that us and other brokers have used for years to help offset the escalating healthcare costs. Do they fit within PPACA or do they not? And a lot of that has been questioned out there in the business community.
So what 2 or 3 pieces of advice have you been giving to the clients that you work with? One thing that I've heard is that maybe it's good to lock in your premium rates now early and assure yourself of at least a year of certainty, and then reevaluate where things stand next year.
Yeah, well, and again, that's for the groups with less than 50 full-time equivalent employees, but that is clearly the case with a good portion of our clientele based here at Tompkins Insurance. Healthcare reform is going to affect how the ratings of these smaller groups. They're taking age bands and narrowing the age bands, which could benefit the groups that have a little bit older, or I refer to as a more experienced group.
Who would normally be a little more costly.
Who would normally see a little bit more, it would see an increased cost for no other reason than just the fact that they have an average age that's older than the norm.
Right.
And then the other big piece of change for the smaller group, for the 50-person or less group in Berks County, or in the country really, is employers are no longer, or insurance carriers are no longer be able to ask employers to have employees fill out medical questionnaires at time of enrollment or to get final quotes. Inevitably, the easy part of our job is to get quotes. Then we have to following with the medical questionnaires. Those are going to be going by the wayside also, effective 1/1 of 2014. So,
because the pre-existing conditions, which would have been, I guess, the main reason for filling out those questionnaires.
Sure. Yeah, the main reason they did it is to figure out what the real healthcare, get a real feel for what the healthcare dollars are going to be for that particular client.
Right.
So if you're an employer who had, on the one side is a younger age group and has generally less claims, less experience, I think you're going to see potentially a catastrophic rate increase versus those groups who could be on the other end of the spectrum, where maybe a little bit older or more experienced, if you will.
Right.
But with being more experienced and further down the road in our careers, we also tend to have more claims, just the way life works.
Sure.
So I think it's bringing both of those into sort of closer to the middle.
Right.
They're narrowing the age bands and eliminating the medical questions. So those groups potentially, should work, and I guess we have to wait and see, but it should work that the older, more claim-prone type of business will see a benefit from
pay a little bit
healthcare
less.
reform, and the groups who are out there paying significantly less than the marketplace today, simply because their age and their health situation is positive, they're going to see an artificial increase in their rates.
Well, let's talk about that. First, among the clients that you have, are there employers that are predominantly have younger, healthier employees?
Oh, I have
receiving health benefits?
I have a lot of groups that have a younger clientele, or excuse me, employee population than what I would say the norm is in Berks and central Pennsylvania.
So they're concerned about this.
Very concerned. And those are the types of groups who are probably taking advantage of the early renewal that is available to everybody for a 12/1/2013 effective date.
Now, are those early renewal people, are they getting an incentive to lock in early? Are there discounts being offered to do that?
No, I think what they're saying is each and every insurance company that we deal with basically sent out a scorecard. I don't know how else to reference it, but said it might be a good idea, it might not be a good idea, and you can agree or disagree with them. But in general terms, if the clientele fell into the quote unquote little bit older age group, as well as maybe higher in claims, that they probably aren't a great candidate to renew early. The younger groups are going to be, and the healthier groups are going to be the ones who want to renew early. So we were given some guidance by the insurance companies, but we're not exactly 100% sure where they got their guidance from.
So it's almost like they're recommending that you lock in early as a hedge against a dramatic
what
rate
they're
increase
saying,
later.
well, what they're saying is you can lock in for 12/1, and then the first, because healthcare reform, the 2014 mandates basically don't kick in until your first renewal on or after 1/1/2014. Well, 12/1/2014 is as far as they can kick the can down the road.
Right.
You know, and there are some thoughts out there that they're hoping that some of this stuff, some of the pieces of legislation might get altered or tweaked. I don't think there's any hope of repeal. But at the end of the day, I think there is some hope out there, not with me, but in the community, that some of this stuff will be backed off a little bit. And there have been some examples of that. The employer mandate on July 2nd of this year, you know, I was at my son's baseball game and my cell phone blew up at around 7 o'clock when all the alerts came in from all the different
They pushed the deadline back.
services, and they pushed the penalties back a year. You know, they didn't, but what that led to is, again, some of that it's not misinformation, it's just misconstrued information that, oh, that means the entire thing was pushed back by a year.
No, just that one.
And it's not, and you have to get your clients focused back on saying, okay, we have to deal with this, it's just that you don't have to deal with the penalties.
Right, okay. Well, what's your bottom line kind of thought on how all this is going to work once we get into 2014? Do you have a gut sense for whether more people getting access to health insurance, more people being covered, less uncompensated care at emergency rooms? How's it all going to shake out, or is it just too complex to try and...
Well, I think, you know, from my point of view, dealing on the insurance side of things, there are some aspects of the law that, quite frankly, I think are something that you could have passed 10 years ago. You know, dependents to age 26, you know, allowing employees to keep their children on the health plan, irregardless to student status or not, up to the age 26 for most cases. You know, there is a cost to that, but it wasn't significant enough that I don't think that could have been something that was
Because these are all,
rectified.
for the most part, young, healthy people.
Young, healthy people, right. Some of the big problems, though, you have out there with employers are going to be, you know, the government is now considered, for healthcare reform, is saying 30 hours a week is your full-time equivalent employee. We have plenty of employees, and there's plenty of employers out there who say that their full-time employees are 40 hours or maybe 37 and a half. Now, all of a sudden, if they have a 30-person group and there's 5 people who are somewhere in the 30 to 37 and a half or 40-hour range that are now eligible for health insurance, that's going to really drastically affect the bottom line. So I think what's happening is employers are starting to they're going to start working to 29 hours a week, or they're going to start passing more cost of health care onto those employees.
Let's talk briefly about some of the other work that you do here. It's hurricane season now in the Atlantic. Do you folks have any exposure in handling lines of insurance, property insurance?
We do. We have a full division that does that. You know, we are a large regional agency. I am only on the employee benefits division of that, but we do have a full personal lines division, which would include your homeowners and your automobile, you know, your general liability for, you know, individual purposes, and as well as a large commercial lines practice. So yes, there are some exposures there. I don't think we have a large contingent of clients in those areas so that it would drastically affect our book of business.
So most of your business then is on the benefits consulting?
My personal majority of my business is on the employee benefit side of things, whether it's health insurance, life, disability, those types of things, that are all within employer packages.
Are there other issues apart from Obamacare that you're dealing with now?
Now, the biggest issue right now is, a lot of employers are starting. It looks like the economy might be turning around. One of our indicators of how the economy is looking is, quite frankly, how are some of our smaller companies, the companies that they used to have 30 employees that are down to 15, are they back to 20 now? And we're starting to see that, they're hiring, and we're starting to see that a little bit in some instances, especially in the construction field. Not seeing it so much at least in our book of business on the manufacturing side, but the bottom line is hiring is going to be curtailed by healthcare reform, because I think employers are going to try to, or be hesitant on adding anybody that's 30 hours a week or more. They're going to have to get to that full 40 hours a week, because at that point they have to offer health insurance. And some of the other confusion with healthcare reform is simply just around the rules, and do I even qualify does my company even have to pay a penalty? And you have groups out there who only have 15 people on the health plan, but maybe they got 70 people who are part-time employees. Well, depending on the number of hours those part-time employees work, that may push them to over the 50 bracket, which means they would be subject to penalties. So there is just a lot of information out there that, there's a lot of media sources out there that are sending this out. It's not more than 3 times, 4 times a week that the Reading Eagle has something in the paper about healthcare reform, and it's a national story. But I think a lot of people are looking at this and sort of interpreting some of the things they read and hear, and sort of put it the way they want to put it. So I think our biggest problem right now is dealing with not only the government sort of massaging the deadlines and the rules that they have with healthcare reform, but it's also helping the general public out there understand exactly what those rules are going to be, to the best of our ability.
And we'll let that be the last word. Thanks, Steve.
Thank you.